Hey everyone, and welcome back to the channel. Today, we're re-diving into a developing story that could have massive implications for millions of people across the UK, especially if you're one of the 4.4 million self-employed individuals. There's a storm brewing in Westminster, and it's centered around a potential £6 billion tax raid that could dramatically change the financial landscape for freelancers, contractors, and small business owners. So, what's all the fuss about? Well, reports are surfacing that the Chancellor, Rachel Reeves, is considering a major tax shake-up in her upcoming budget. The plan, which was originally proposed by the think tank Resolution Foundation, involves cutting employee national insurance contributions by 2p, but at the same time adding 2p to the basic and higher rates of income tax. On the surface, for a typical employee, this might sound like a neutral change, a simple switcheroo, but the devil, as they say, is in the details. And for the self-employed, pensioners, and landlords, this isn't a simple swap, it's a straight-up tax hike. Let's break down why this is such a big deal. The self-employed pay income tax just like everyone else, but their national insurance contributions are structured differently. They don't pay employer NICs, and their own contributions are generally lower to reflect the fact they don't receive the same benefits as employees, like sick pay or holiday pay. This proposed change completely bypasses national insurance and directly targets income tax. So, while employees get a NICs cut to offset the income tax rise, the self-employed would just see their income tax bill go up, with no corresponding relief. The Association of Independent Professionals and the Self-Employed, or IPSE, has sounded the alarm. Fred Hicks from IPSE described the potential move as a tax hike on the self-employed and a tax hike on working people. This directly contradicts Labour's manifesto pledge not to raise taxes on working people. The core argument here is about risk and reward. Choosing to be self-employed is inherently risky. You're giving up the security of a steady paycheck, paid leave, and a company pension. The current tax system offers a slight incentive to compensate for taking on that risk. Hicks warns that if the government starts chipping away at the incentive to take on that risk, we'll have fewer people daring to strike out on their own. This isn't just about individual bank accounts. It's about the broader economy. Freelancers and independent professionals form a crucial pool of flexible talent that businesses of all sizes rely on. They bring specialist skills, fill temporary gaps, and help companies adapt and grow without the long-term commitment of hiring full-time staff. If that talent pool shrinks because the financial incentive is gone, it could have a serious knock-on effect. Think about the timing of this. The UK's self-employed population took a huge hit during the pandemic, dropping from a high of 5 million to under 4.2 million. It's only just started to creep back up, reaching 4.4 million now. IPSE highlights that around 350,000 people have become self-employed in the last year alone. For these new entrepreneurs, who are just finding their feet, this potential tax increase could be devastating. As Hicks put it, it could pull the rug from under their plans and force many to abandon their ventures before they've even had a chance to succeed. It's like planting a sapling and then immediately changing the climate. Now, let's look at the argument from the other side. The Resolution Foundation, the think tank behind this proposal, argues that the self-employed currently enjoy a significant tax advantage over traditional employees. Their proposal to swap to P from NI to income tax is designed to narrow the gap. It's worth noting that the former head of the Resolution Foundation, Torsten Bell, is now a Treasury Minister, which gives this proposal a bit more weight and explains why it's being taken so seriously. The idea is to create a more level playing field between different ways of working. However, critics are pushing back hard against this idea of a tax advantage. They argue that the so-called advantage is a necessary compensation for the lack of a safety net. The self-employed don't get statutory sick pay, paid holidays, or employer pension contributions. They bear the full cost of their own training, equipment, and insurance. They face irregular income and the constant pressure of finding the next client or project. So, is it really an advantage, or is it a fair reflection of the different realities of employment and self-employment? Beyond the specific impact on the self-employed, there are wider economic concerns. Stephen Evans, the chief executive of the Learning and Work Institute, has raised a crucial point about the timing. With unemployment on the rise and the economy looking fragile, is now really the right moment to be raising taxes on a key part of the workforce? He warns that for many businesses and sole traders who are already struggling, this could be the straw that breaks the camel's back. They're already dealing with rising costs, a higher minimum wage, and increased employer NICs from previous changes. Adding another tax burden into this mix could stifle growth and even lead to job losses. Even politicians are weighing in. The Shadow Business Secretary, Andrew Griffith, has labelled the proposal another stealth tax on the self-employed, a group he calls an endangered species that he feels is already being aggressively pursued by HMRC. He poses a pointed question. Instead of ideas to raise taxes, why don't the Resolution Foundation put on their thinking caps to cut wasteful spending? This shifts the debate from simply how to raise revenue to whether it's necessary to raise it in the first place, suggesting that government efficiency should be the priority. Of course, when asked for a comment, the Treasury gave the standard official line: "We do not comment on speculation around future changes to tax policy outside of fiscal events." This is typical and expected, but it does little to calm the nerves of the millions of people who could be affected. Until the Chancellor stands up to deliver her budget, this uncertainty will continue to hang over the self-employed community. So, what does this all mean for you? If you're a freelancer, a contractor, a gig worker, or run your own small business, this is a story you need to follow very closely. A 2p rise in income tax might not sound like a lot, but when it's applied to your entire taxable income without any offset, it can add up to hundreds or even thousands of pounds a year. That's money that could have been reinvested in your business, put into a pension, or simply used to pay the bills. This isn't just a dry policy debate. It's about the future of work in the UK. It raises fundamental questions about how we value and support entrepreneurship. Do we want an economy that encourages people to take risks, innovate, and create their own opportunities? Or do we want to push everyone towards a traditional model of employment? This proposed tax change could be a pivotal moment that answers that question. It could either nurture the fragile recovery of self-employment or potentially send it spiraling back down. We'll be keeping a close eye on this as the budget approaches, and will bring you all the latest updates as they happen. It's a complex issue with strong arguments on both sides, but the potential real-world impact on the livelihoods of millions of hard-working people cannot be overstated. What are your thoughts on this? If you're self-employed, how would this potential change affect you and your business? Let us know down in the comments section. I'd love to hear your perspective. This is a conversation that needs to happen. Thanks so much for watching. If you found this video informative and want to stay up to date on this and other important financial news, please hit that like button and make sure you're subscribed to the channel. Don't forget to ring the notification bell so you don't miss our future updates. Stay informed, stay engaged, and I'll see you in the next video.